Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. U.S. stock markets hit another round of record highs as he expects stock market enthusiasm to continue into the summer. DollarCollapse.com's John Rubino has some interesting insights into what could go wrong with our booming stock markets and examines the U.S. government's $1.9 trillion stimulus plan and new digital ways of accumulating wealth. Ed Steer, founder of EdSteerGoldandSilver.com, digs deep into the precious metals market and how manipulation is keeping down the real value of silver. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at ChartsByRoss. Welcome back to This Week in Money, Ross.
Always a pleasure, Jim.
Ross, record highs everywhere you look this week.
Well, as far as the equity markets are concerned, yes. And I guess as far as the interest rates are concerned, we're looking at new highs for the move. But, yeah, this has been a pretty exciting week. A week ago, we were in the midst of a correction. And, it was interesting looking at it, from a seasonal perspective, we typically look for that February into mid-March correction, especially in the first year of a presidential term. And the classic is that you're going to find in the rising years, and if we look back, I guess since the 1970s, there have been 8 years where the Dow was in a rising trend going into the first quarter. And of those, you would find that it would have good support in the January-February stretch around the lows that happened just prior to Christmas. And as you moved through the calendar quarter, any corrections would hold against a moving average support that we look at, which is a band below the 50-day average. And we would look for one of our oversold springboard signals. Well, a week ago Thursday, we had all the pieces in place. The Dow had corrected back to about 30,600. The support was to be around 30,470. We had one of the springboards in place, and the moving average was being tested. So everything that we wanted was pretty much in place as far as the Dow was concerned, and the Russell 2000 had a really good signal as well. And I like the fact here that we've gone through this big rotation in the years, 4 or 5 years leading up to March of last year. Clearly, the high tech stocks were leading the parade. Everything took the hit into mid-March because of COVID, and then those high flyers came back on very strong into late June, July. But by the time we got there, we were getting the type of excess readings, our exhaustion signals, etc., that we look for around highs. And looking at the big names here that were the leaders, the Amazons, the Apples, the Netflixes, they've just been biding time ever since last summer, and the money has been moving. As you can see, if you look at the ratio between the the Russell 2000 and the Nasdaq, or between the Dow and the Nasdaq, you can see that these industrial stocks, the financials, and the commodities have really taken hold. And that money is coming to them from the previous high flyers. So rotation is the name of the game. And I guess, starting next week, there'll be a huge influx of new cash to the market.
I saw a survey that said about half the millennials who will be getting those $1,400 US, $1,700 plus Canadian checks plan to invest it in the stock market. Does that mean we're going to see even more record highs?
Well, that money will definitely have an influence. There's no question about that. We, as always, as technicians, we need to watch and see what the influence is. The norm here would be that, yes, we would be looking at higher highs, because once you had that mid-February into March correction in those first years of the presidential cycle, once you break out, as we did this week in the Dow and in the Russell, the probability of rallying into the summer is extremely good. The only years that failed, 1973 and 2005, failed to continue on the upside. But of the other 6 years that had already been uptrending, they all continue to move higher. Now, corrections are likely, and if we look at the trading range that the Dow was in here in February, we can allow it, the market, to come back and overlap that high that we had 2 weeks ago by as much as 25% of the trading range. So round numbers, about 31,700 on the Dow is what I would say for us now becomes the new line in the sand. It was previously down at the 30,400, but now I think 31.7 is a level to be watching for. Any correction that comes back towards there is reasonable and healthy. What we've seen in this last few weeks here, as the value group have been rallying and outpacing the high-tech stocks, we're starting to see some excesses on both the daily and weekly charts. So if we go up and form an interim top in this next couple of weeks, that would be very timely for a mild correction. What concerned me is if this thing turned into a euphoric run, and then I start to get big signals on all three time frames, daily, weekly, and monthly, that would then set up for a much harder correction. But for now, look for corrections back to retest the breakout as a normal piece of action.
Crude seems to have had a pretty good charge. Do you expect it to continue?
Yeah, talk about methodical. This market has, since it turned the corner the latter part of the year, just around $34. Every correction has been very, very mild. Just pulling back to the 20-day average, I just would have got this 1, 2, 3, 4, 5 times now, and that average sits at about $63. The weekly chart is up against some resistance. Anything from 65.5 up starts to look a little excessive here. The indices, if you take a look at them, at the XLE, the XEG here in Canada, there's some excesses starting to show up there, and I really would hope we get a minor correction in terms of the sector, but the trend is your friend until it ends.
The last time we talked, lumber was booming. Is it continuing to be a hot commodity?
There's been a lot of volatility up here as far as lumber is concerned. It did trade up over 1,000 during February. Actually spent a few days up there. Now we've got the rollover of the contract, and so we're back at 865. This is an item only for the faint. Nobody with the faint heart to take a look at. Trend is up, but wow, more volatility than and lack of liquidity than I could ever look at. But if you took the home builders, the Beezers, the Rylands, the DRIs, they're still in nicely defined uptrends here.
Before we go, Ross, can you tell us about your special?
Well, we've for the last week we've been offering 25% off annual subscriptions for new subscribers, and we're continuing that through this weekend. So we welcome everybody to come on board, and if you're not up to a full annual subscription, $200 will give you all the reports that we've put out since the 1st of March, and that'll be through the middle of May. So come on board and have a look at the research that we do.
Ross, thank you so much for being on This Week in Money.
Thank you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. Coming up, John Rubino, next on This Week in Money.
Always consult your investment professional before making any investment decision.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome back to This Week in Money, John.
Hey, Jim. Good to talk to you again.
John, for people new to dollarcollapse.com, what's the website all about?
Well, dollarcollapse.com is a gloom and doomy financial website that it is chronicling all the horrendous financial mistakes that the developed world is making, and trying to offer some investment advice about when things really hit the fan, how we invest to protect ourselves and maybe make some money. So it's more than anything else an investment site focused on real assets like gold and silver, things that tend to do well in the kind of crazy times that are coming.
Are we in the biggest stock market bubble of all time?
We absolutely are. Today's stock market is more overvalued and more precarious than any previous stock market, including the one in 1929 that collapsed and brought on the Great Depression, and the one in 1999 that, when the tech stock bubble burst, almost blew up the global economy. We're in worse shape than either of those, stock market-wise. So the logical approach would be to be shorting everything in sight right now based on history. This time around, however, the governments are, instead of tightening like what happens normally before a stock market collapse, they're still incredibly easy. They're just shoveling out newly created currency and dumping it in the banking system. So we don't know what that's going to do to already bubblicious assets, because that's kind of uncharted territory. So this is a tricky time. But a really dangerous time, and also one that's full of opportunity. So it's quite an intellectual challenge now, trying to figure out how to invest in this market.
Where's the bottom for gold?
Oh, I think it's reasonably near. Gold had a great run up to above $2,000 US per ounce in the past year, and then since then it's been kind of consolidating and correcting a little bit. But given what's happening in the world, in other words, given the size of the deficits that most of the big countries are running and the amount of new currency they're creating and the amount of debt that they're encouraging their private sectors to take on, that's paradise for precious metals. So I think it won't be long before gold and silver take off again into what will probably be the best bull market ever for precious metals. So life-changing money is coming to those who get the precious metals investing thesis right.
Bitcoin claims that it's the alternative to gold. It's safer than gold. What's your opinion?
Well, Bitcoin is fascinating, and I love the idea of private sector money that's not under the thumb of any government regulatory agency, just taking over the monetary world. And Bitcoin is generating a lot of interest and a lot of acceptance out there. But the idea of it replacing gold, to me, is a little far-fetched because they're not the same thing at all. Bitcoin really requires there to be an internet and there to be electricity. And so, imagine going to, in a big blackout, like they had in Texas now, let's say something like that spreads either because of an EMP attack or a cyber attack or really bad weather or an economic crisis. Any number of things could affect the power grid. Let's say you're, in a blackout in Arizona trying to buy a used car at a used car dealer, and I've got Krugerrands, and you walk in with the promise of Bitcoin once the electricity comes up, I'll get that car. So, to the extent that Bitcoin is a store of value, and it has to pass some tests before we can say with certainty that that's the case, but to the extent that it is, it's not in place of gold, it's a complement to gold, because you need physical money. The physical is not going away just because cyberspace is becoming a place where more and more things happen. And we're always going to need physical money as the bedrock of our financial life. And that's what gold and silver do. Physical gold and silver have no counterparty risk whatsoever. Nobody has to keep a promise for gold and silver to stay valuable, whereas anything that exists online requires somebody to keep a promise for you to access it, even if you still own it, because you've got the code, as with Bitcoin. You can't access it. It doesn't matter in the short run. You need something physical. So I see plenty of room for all the different safe haven assets. Cryptos can be out there and be used and be just fine. Gold and silver also can do their thing. And the important thing is to avoid financial assets like bank stocks and treasury bonds, because those are the things that are really going to get smacked when the financial markets turn the way they're going to. So I don't think we should be speaking in terms of competition between Bitcoin and gold. I think we should be thinking in competition or in terms of real assets competing successfully with financial assets. That's the way to look at things.
Are governments going to eventually ban cash?
They're doing their best to make cash unattractive. I think the time might come when they have to ban it to get some of the things they want to get done, because they're going to very possibly have to go to negative interest rates in the next financial crisis. Cash stands in the way of that, because if your bank account is yielding negative 2%, it's logical just to pull that money out and keep it in cash. And then that short circuits the government's plan to maintain negative interest rates. So they're liable to do something that feels like a ban of cash, where they pass some law where cash has an expiration date or something. That's an actual proposal where it's worth 100% of its face value this year, 90% next year, 80% the year after that, to encourage you to spend it, right, instead of hoard it. So stuff like that is very possibly coming, and an outright ban isn't inconceivable. That could happen.
What role does the U.S. COVID stimulus play in the coming year for the financial markets?
A gigantic one, because already we're going to dump $1.9 trillion into the financial markets with the current COVID relief plan. And Biden already has an infrastructure plan all teed up that they're talking about $2 to $4 trillion for that over 10 years. So that's going to be this other huge infusion of cash into the market. And we've got all these bankrupt industries and sectors out there that are going to need bailouts in addition to what we're doing right now. For instance, most state and local governments, well, not most state and local governments, but many states and localities in the U.S. have let their pension funds run out of control, and they're going to be bankrupted by them if the government doesn't step in and bail them out. That's going to happen. Student loans. We encourage colleges to raise their tuitions, and we encourage kids to borrow money to pay for it. We got all these indebted kids out there that the current administration intends to bail out one way or another. So that's going to happen. So, we're going to just flood the system with cash. And that's going to affect the economy. I suspect that it means we'll have growth then we'll have inflation, then we'll have soaring interest rates, and then we'll have a collapse. That's probably the way it'll play out. But who knows what the timing of all of that will be.
As economies reopen, how are the markets likely to react?
Yeah, that's a very tricky question right now because the financial asset markets in the U.S. went up during the worst of the recession and the worst of the lockdown. The government just handed them so much money that people just continued to buy treasury bonds and growth stocks and houses. So everything's way up. And the idea that more money will make them go up even more is defensible. That's completely possible. But since we're already at bubble levels in terms of valuation, it's not a guarantee. As I said, it could be that the more money they pump into the system now, the higher interest rates go in anticipation of higher inflation, and that short circuits the whole thing. So, that's out there somewhere, but it could be this year. There's no way to know.
If inflation comes back big time like it existed back in the late 70s, early 80s, I remember Canadian government bonds paying 21%. Are we going to see interest rates like that again?
Well, if we used interest rates as a tool to try to fix what's coming, they would have to be really high interest rates. But we can't do that because we've, in the ensuing 40 years since the end of the 1970s, we've encouraged everybody to borrow insane amounts of money. So now if we were to try to raise interest rates to that level again, we would bankrupt everybody who has a variable rate loans, who has debt that they have to roll over, or who has new borrowing that they have to do in order to run their business or survive. So if we went to double-digit interest rates again, we'd guarantee a 1930-style deflationary depression. So we can't do that. Then the question becomes, what do we do when inflation starts to pick up? And it's not clear that there's anything that we can do. So that's what's so scary about this. And so exciting from a gold bug investor standpoint is, we're going to reach a point where the governments just literally have no tools left with which to combat the next crisis. And people are going to figure it out. It's going to become obvious. And then everybody's going to panic. So that's the world we're headed for. And, as you said, it's going to be triggered by rising inflation, which causes interest rates to go up. And we will have no fix for that when the time comes.
Is inflation back in a meaningful way?
Yes, it really is. I mean, we're seeing, obviously financial assets be way up. We've got bubbles in stocks, bonds, and real estate. And we're also seeing rising prices in industrial commodities, like lumber and iron ore and copper. Those things are way up too, which would normally feed into the consumer cost of living at some point. But now we're seeing all kinds of crazy other things happen, like sports cards are starting to go through the roof. You're hearing these big name football and basketball players selling rookie cards and things like that for incredible amounts of money. And there's this thing called NFTs, non-fungible tokens, that have just come along, which are pieces of digital art, which can be sold over the blockchain. And in that way, ownership is absolutely etched in stone. So it creates scarcity. In other words, there's only one of those pieces of digital art that exists, and you own it. And so that concept is attracting huge amounts of money. We're seeing things like something sold for $600,000 a few months ago, and it just sold for $6 million. Stuff like that is happening all over the place. Christie's just auctioned off a piece of art where their beginning bid was $100, and it went for $60 million. So those are also signs of inflation in the sense that for stuff like that to happen, there has to be just way too much free cash floating around in the world. And basically what people are doing is they're buying scarcity, and they're willing to pay anything to get scarcity because their money is the opposite of scarce now. It's being created at a rate that is absolutely unmanageable. And people know that. And so anything that has the cachet of scarce is suddenly really valuable. It's like slapping .com on the end of a company in the 1990s. People would pay quadruple the old stock price if you just changed your company's name to something.com. Now it's the same thing with art. If, although I think that's a really flawed concept, by the way, because art is already scarce by definition. There's only one copy of Starry Night. There's only one Mona Lisa. So digitizing stuff like that buys you nothing as far as I can tell. So if the piece of digital art that you're buying wasn't already valuable, then you uploading it via a blockchain and owning it makes it no more valuable because it already exists online. If there's a picture of it, somebody can, replicate that as many times. And those things are absolutely identical in every meaningful way to the copy you own. So I think this is one of those things like the .coms where people are so desperate for this thing that has become suddenly priceless, which is scarcity in this case, that they're wildly overpaying for it. And this will be one of the things that blows up when the system crashes like it's going to.
Does this have several shades of tulip mania back in the 1600s? Where, look, it's just a flower. It doesn't really represent much except beauty in your eye. So now we have NFTs and Bitcoin, which really don't exist either.
Yeah, they don't have an actual physical existence. With Bitcoin, whenever you see an article about Bitcoin, you see these gold coins with a B on them. That's just made up. There are no Bitcoins in the sense of a piece of gold or something that looks like gold that you can hold in your hand. Nothing like that exists. So yeah, I think I'm not lumping cryptocurrencies into the same category as NFTs, though. That's something that is happening in the art world that I have a lot of questions about. That looks suspiciously like, as you said, tulips or something that has no actual value, no real physical reality, and yet is all of a sudden attracting a ton of money. That looks like the kind of thing that can blow up. Cryptocurrencies may have uses, and I like their concept. I just think they need to pass some very serious tests before we can start talking about them in the same breath as gold and silver, which have passed every test for 5,000 years and have held their value that entire time without a single exception.
We'll have more with John Rubino right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with John Rubino. John, is the silver short squeeze still a realistic possibility?
Yeah. The market is still tight in silver, in physical silver. So I think it's completely possible that, as we talked about, there's a ton of hot money sloshing around out there. And it would take just a tiny, tiny fraction of it flowing into physical silver to soak up all the available silver that's out there and cause a notable shortage that they couldn't hide anymore. So you'd see premiums go through the roof in a sustained way and all the other kinds of things that happen during shortages. People doing really bizarre things to get a hold of physical silver besides paying up. And then the COMEX, where silver is traded in the paper market, which is basically a fractional reserve banking system where there are way more claims to physical silver trading on the COMEX than there is physical silver to satisfy those claims. And it's fine now because most people don't ever ask for delivery when they've got a long silver contract. They just cash out for cash. But it wouldn't take very many of them either to ask for delivery to bust the COMEX. So yes, we could still have a silver squeeze that sends the price through the roof, bankrupts a lot of silver players who are on the other side of that debt, and enriches the guys who are stacking right now. I think that's all out there as a high probability, not even just a possibility, but it's something that will probably happen in the next few years.
Is it possible for a company that's holding your silver to default and just say, sorry, we don't have any, you're out of luck, you just don't get anything back?
Yes, that's the counterparty risk I was talking about. If you don't own it and you don't have it in hand, you don't really own it. There are people who store silver and gold for you who have a history of being trustworthy. And I think as far as diversification goes, they should be one of the places that you put some of your gold and silver, along with a bank safe deposit box, which isn't completely safe, but is a diversification, and some that you have on hand and some that you store with trusted friends. And, you know, you want to spread it around as much as you can. But there are also, for instance, unallocated gold and silver accounts where you're basically just an unsecured creditor of that company. They tell you, oh, you got gold, like the GLD ETF, right? You think that's gold, but it's not. They could stiff you. They don't even have to give you cash back. You know, they can just go bankrupt and you lose everything. So you should be very, very careful about who stores your silver. For instance, right now there are two big silver ETFs. The SLV, whose custodian is JP Morgan Chase, and whose rules are not airtight as far as I can tell. And then there's PSLV, which is run by Sprott, who has a history of trustworthiness in precious metals and who have much tighter covenants. So given a choice between those two, it's probably much safer to store your silver with PSLV. In other words, if you buy shares of PSLV, you're getting actual silver in their vaults. And that is safer than a lot of other storage options. But the safest is in hand. So make sure that that's the bedrock of your financial life. And then everything else is slightly riskier diversification.
Mining stocks have taken a hit lately. Are they getting cheap?
Not really. I mean, they're down from their peak, but I've been looking and seeing if there's any that are cheap enough to be exciting to buy right now. No, they're still pretty expensive compared to where they were 2 years ago. They had a hell of a run, and they're up nicely. Just because they're down some in the last couple of months doesn't mean they're down. It just means they've come off very nice highs. And the last few days have been pretty good for them. They're starting to turn around already. I don't know if this is a guarantee, because, what I worry about with them is that if there's a stock market crash, people just sell everything, including the mining shares, and so they could fall along with bank stocks and tech stocks and things that should be falling. And so you could see a bear market in mining stocks through no fault of their own. They're doing everything right now operationally. Their prices are, not super cheap anymore, but not crazy like a lot of other sectors. But they could get smashed along with the rest of the stock market if there's just a broad-based bear market. So I think that's the big risk with mining stocks. There's nothing operationally wrong with them. They're priced okay, but sometimes being priced okay is a prelude to being priced incredibly cheaply. And you don't want to ride something down from okay to screaming cheap. You want to have some money free and just buy in at screamingly cheap. So again, don't jump in with both feet here. It's good to spread your money around. It's good to have some cash on hand in anticipation of a market crisis, which we could easily see. And it's also good to be betting against a lot of these stocks. If you're sophisticated enough to know how to short things, shorting should be another diversification. Not the only thing you do, not the biggest thing you do, but you should have some shorts out there so that you benefit if the stock market tanks.
Is the push for electric vehicles likely to continue to grow under the Biden administration?
That's a done deal. It doesn't matter who's in charge. If Trump was still in charge in the U.S., we would still have a boom in electric cars and solar panels, because those are technologies whose time has come. Cars were fairly new during the Great Depression, but they boomed, even though everybody was broke. But we still sold way more cars towards the end of the Depression than we did at the beginning. That's because it was cars' time. Well, now it's electric cars' time, and it's solar powered time. So we will see booms in both of those, and they're complementary, by the way. You know, you put solar panels on your garage, use that to charge your electric car, and you're virtually off the grid. So, yes, electric cars are going to boom. See, that's kind of the investment thesis for Tesla. When you look at Tesla, it's wildly overvalued in terms of being a car maker. But, you know, the car industry is seen as mature, but it's not anymore because it's going to completely flip over from internal combustion engines to electric motors. So that means that there's going to be this huge period of dramatic exponential growth for the electric car makers. And there are people who buy Tesla based on that thesis. In other words, it's not cheap because it's in an exponentially growing business. You know, it's actually a hyper-growth stock. I don't buy that. I'm still short Tesla because it is insanely expensive. But I see the logic of that. And if Tesla was a lot cheaper than it is right now, I would probably be a buyer based on that thesis because they're going to sell a lot of electric cars in the next 10 or 20 years. But you know, you still want to make sure that you're not buying something that's overvalued that has to grow into that overvaluation. Because it's very hard to make money in that kind of a situation.
Instead of investing in an electric car company, would you be better off to focus on the materials that go into the batteries, lithium and so on?
That's called the picks and shovels play. In other words, you don't bet during a gold rush on any one gold mine. You sell picks and shovels to all the miners who are coming there and betting on it. And, you know, everybody's jumping into electric cars. And there's no way to know who's going to win. But if you're the guy selling them the lithium or the nickel or, you know, the silver for that matter, because silver goes into electric cars too, you tend to make money in a more steady, predictable way because it doesn't matter, you know, whether Ford is winning or Tesla's winning or VW. If you're selling them all the stuff they need, whoever wins is going to buy from you, and you will make out. So yes, the stuff that goes into electric cars are more interesting investment plays than the actual electric car makers.
Do you expect the U.S. federal government to legalize marijuana?
Yeah, that's another thing that time has come, right? Some states did it. You know, better late than never. And they didn't descend into chaos. They're completely normal states. You know, I'm in Washington State right now, and the fact that there's a weed store on a given street is the only thing you notice about the fact that weed is now legal. So I think that not only marijuana, but a lot of other drugs are going to be legalized over time because one of the things that happens is, in really good times, we get cocky and think we can control events. So that's when we tend to make things illegal. And then in harder times, we recognize the limits of our power, and we start looking for things that we can stop trying to control because we realize we can't control anything really. And so we're heading into really hard times when our sense of control is going to be tested. And I think drugs will be one of the beneficiaries of that. We're just going to say, okay, look, you want to do cocaine? Do cocaine. Leave me out of it. I don't want to try and control you anymore. You know, that's going to be the public policy attitude. So yeah, everything's going to be legalized at some point.
Well, you look at the violence on our streets in the Vancouver area. Drug gangs are holding shootouts every second night. You take that money away from them, they have no motive to go around shooting themselves and their buddies and anybody else who happens to be in the way.
Yeah, and on the Mexican border too. I mean, the U.S. drug laws are responsible for all those people being killed by cartels down there. So you want to put the cartels out of business, make their thing legal, let them compete with the tobacco companies and the drug companies, and they will go out of business very quickly.
Is there any sector right now that is kind of under the radar, but you're keeping a close eye on?
You know, not really. I'm sort of a one-trick pony. Oh, okay, a several-trick pony. I'm precious metals all the way. You know, I have a lot of mining stocks, and I have a lot of physical precious metals, and I've got a lot of stock market shorts, and that is very close to being it in this market because I just don't see anything else being exciting right now because, you know, if you expect a big crash, based on valuation and based on stupid public policy and everything, it's hard to get excited about even industries that are going to be great. I mean, there are some technologies coming along that I love, like vertical farming and cultured meat. You know, there are things that are just going to revolutionize the world. But if we're heading into cascade failure of the financial market, then it's not very interesting to be buying their stocks. So I'm extremely defensive right now in just a handful of sectors, and really don't even pay attention to the actual stocks in other sectors. I pay attention to the technologies. Like I read everything I can get my hands on vertical farms and cultured meat. But I would never invest in one of these companies right now, just because it's possible that I'll be able to buy the thing out of bankruptcy 5 years from now, you know. And it'll be the same company with the same technology, just that their timing was bad. So that's it. Sorry, long-winded question to what could have been a simple answer, which is no, I don't have anything else to look at.
Is the work-from-home phenomena going to end once people feel safe from the COVID virus?
Partially, but not completely. It turns out that a lot of people can work from home who didn't know they could, and their company didn't know they could. So all of a sudden, having these gigantic offices in super expensive downtowns in trophy cities is maybe an unnecessary expense for a lot of companies. They're looking into it now. They're trying to figure out exactly how many people they can have work at home. And the eventual answer is going to be pretty big. It's going to be fairly a large number. And it just remains to be seen exactly how they do it. But they are going to try to do it.
John, thank you so much for chatting with us.
Thanks, Jim. Good talking to you.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Coming up, Ed Steer, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Ed Steer, founder of EdSteerGoldandSilver.com. He's also a director of GATA, the Gold Antitrust Action Committee. He's speaking to us from beautiful Merritt, British Columbia. Welcome back to This Week in Money, Ed.
Well, thanks for having me on, Jim.
Ed, what are you seeing in the latest commitment of traders' numbers for gold and silver?
Well, not surprisingly, with the engineered price smashes we had in gold and silver this past reporting week, which ended on Tuesday at the COMEX close, there certainly was commercial improved short position in the commercial categories where they reduced their short positions in both, and so it was a vast improvement. The situation regarding the COMEX future structure in both silver and gold right now is wildly bullish, and the activity that we've had since the Tuesday cutoff really hasn't changed anything. I mean, we had a big down day, of course, overnight last night, but then it all came roaring back today, and gold finished up on the day. So basically, we're about as washed out as we're going to be, and it's more than bullish to the upside whenever the powers that be decide they're going to let the prices run.
Are gold and silver reacting to the U.S. dollar?
Well, I'll tell you what, some days they do and some days they don't. Yesterday the dollar was down, yesterday being Thursday, the dollar was down like 40 basis points or whatever, and gold and silver were both down on the day, I believe. And then today, of course, the dollar's sky high and gold and silver got absolutely crushed. So, you know, I think it's mainly because what's happening in the COMEX futures market, not in the dollar index itself. You know, as long as the big four and big eight traders are stomping around in the COMEX futures market, it really doesn't matter what anything else is doing, whether it be the dollar index or the Dow or whatever. You know, the big four and eight traders determine the price regardless of what the dollar index is doing. Now, in a free and fair market where these traders weren't in there, then of course there would be arbitrage between the various currencies and the precious metals. But, of course, everybody knows for the last 40, 50 years the markets haven't been free and fair in the precious metals. So to say that the precious metals follow the dollar index, that's really a misnomer and very misleading.
What do they really follow?
Well, as I just said, they follow whatever the big 4 and 8 shorts traders are doing. If they're active in the market and trying to bash prices lower, they follow the dictates of what's going on in the futures market and nothing else.
How are the junior, mid-cap, and senior gold and silver stocks looking?
Well, they're all reacting as one would expect. As the prices have been going down, the stocks have been going down with them. The interesting thing is that the silver equities aren't declining as much as the gold equities, which have, really been suffering. Of course, they've both been suffering. But it's certainly been the gold equities on the short end of the stick on this one. I noticed that today, even though gold and silver are both up, or gold is up and silver is still down, the silver equities outperformed on Friday, and they outperformed on Thursday, and as time goes along, they'll continue to outperform the gold shares. Silver's got the most catching up to do as far as price goes. But the expected and imminent rallies in the precious metals are going to lift all boats, so whether you're in gold or silver, the small cap to big caps are going to all do well. But of course, the smaller, more leveraged juniors are going to do the best of all, especially in silver.
Overall, are you bullish on gold and silver stocks as we approach spring?
Wildly bullish. I was bullish last week, last month, and last year, and like I said, it's only the big 4 and big 8 traders that are standing in the way of higher prices, and they have been for the last 10 years or so. And the other interesting thing about it is, if for anybody interested in knowing it, I'm all in. Every single solitary penny I have is invested in the precious metals, the physical metals themselves, or in their associated equities. So I eat my own cooking.
Why are you so hot on the precious metals?
Well, because they've been suppressed for as long as I can remember. I remember when I first got involved in the precious metals industry back it was 1997 or 1998, something like that. And when I found out that they were being managed, I became very interested. Of course, I made a lot of money and I lost a lot of money when the Hunt brothers ran the silver price up to $50 back in, was that 1980, 79, something like that. So I've been, I've had one eye on the precious metals market for the last 50 years. So my interest was renewed over 20 years ago, and there's no question about it that this bull market, when it finally does come, and when the big 4 and 8 traders get off the short positions, it's going to be a wild one to the upside.
What's the latest on silver market manipulation?
Well, it's still the same. Just looking at today's COT report, the big 4 and 8 traders, which you would have thought of when they decreased the short position in the commercial short position this week, they would have actually reduced their short position as well, but they did not. They actually increased their short position by 4 million troy ounces. So the big 4 and big 8 traders are hopelessly trapped on the short side in both silver and gold. And the situation is not improving for them one iota.
Ed, what happened with the silver squeeze, the Reddit message boards and so on, the Robin Hooders, and could we see another shot at trying to squeeze silver higher?
Oh, certainly. They certainly came into the market, and everybody was totally surprised, including the big 4 and the big 8 shorts. And, this came right out of the blue for everybody associated with the precious metals. And they made a big song and dance about it, and there's no question about it. It certainly had an effect on price. And they went out and bought every physical ounce they could find on planet Earth and cleaned everybody out. And, of course, that's certainly having an effect on the supply lines. And it drove the price higher by, 15% or something like that? That's hardly a short squeeze. But the fact of the matter is that all of a sudden, out of nowhere in the last 2 months, the world, which had never even thought about silver, now there's a huge portion of the population is aware of the fact that there is a physical shortage in silver and that there's big trouble as far as the short position in the COMEX futures market. You couldn't make this stuff up, and it's just more bullish news on top of what's already exists.
Do you expect these people to take another charge at it now that they know that a million small investors can have just as much of an impact as one or two big ones?
There's a certain amount of truth to that. The thing is that what they have to do is the small buyers like you and I and everybody else in the Reddit crowd, and of course there's some exceptions to that rule. They're investing like $5,000, $10,000, $50,000, $100,000 and go out and buy all the physical silver, and that certainly makes a difference. But where it has to show up is you have to take delivery in the physical market, in the futures market. You have to go in there with huge amounts of money, like $2 billion, and take delivery, stand for delivery. You get half a dozen big players going in there and say, I want to spend $1 billion on silver, and actually take physical delivery. I can guarantee you that when that day arrives, or the commercial, or the business, the commercials, like Toyota and Apple and any other company that uses a whole bunch of silver decides that, I've seen enough stories about this, let's stock in, a couple of years supply, and they go into the market, and half a dozen of those companies go into the market and decide to take delivery. Well, I can tell you right now, the silver price management scheme will end on that day.
Is there any difference between physical and paper gold and silver?
Oh, sure. I mean, let's face it, the paper market has been wagging the tail has been wagging the physical price dog for the last 50 years. So, when you see a price in the futures market for gold, whatever it is today, and silver, whatever it is today on Friday, that's the paper price of it. It's not the real price of it at all. Nobody knows what the true price of any of the precious metals are, or any other commodity, because they've been suppressed so long. So basically, the paper market is affecting the price of every physical commodity out there. And when gold and silver and all of precious metals are allowed to rip to the upside, it's going to adjust the prices of everything in the physical commodity complex, from copper to wheat. And if you think you've seen inflation, you haven't seen nothing yet until commodities get repriced. Then you're going to see something that frankly we haven't seen since the 1960s. And that's mainly because commodity prices have been suppressed for the last couple of generations. And all of a sudden this commodity price inflation is going to show up all at once. And then, like I said, we're going to have inflation that you just cannot believe.
Platinum and palladium, are those two precious metals that people should keep a close eye on?
Oh, most certainly. I mean, they're just as managed as the other two, as gold and silver. There's always demand for them, and there always will be demand for them, and their prices are going to be adjusted as well. There's very few vehicles for people to invest in those two precious metals. I know that Sprott has a platinum and palladium fund. I was invested in it for many years, and I sold out when palladium hit its peak, a couple of years ago. But you can buy the miners, which there's only a handful. But for the average investor, a mutual fund that invests in them like Sprott is the best way to go. But like silver and gold, they're going to take off higher too, and their prices are allowed to trade normally. But silver is really where it's at. That's going to be where the big move is going to come.
How are the HUI and XAU indexes looking?
Well, they're looking the same as the stocks are looking right now, and because they're composed of those stocks. And right now they're certainly down on the year and down since last August. But it wouldn't take too many trading days where silver and gold prices were allowed to rise before we'd get all those losses back in short order. So the stocks are down. They're also the bargain of the century. And if you're looking for a value stock, all the silver and gold miners out there, without exception, have got free cash flow coming out of their ears, and are about to declare dividends. I mean, these things are cash cows now, and if there was ever a time to invest in the precious metals equities, this is the time to do it.
I was just going to ask as well, is there a seasonality to gold and silver mining? Because I know for the explorers, they can only get out there in the summertime.
Well, that's true, I suppose, but, this seasonality, it's apparent in China because of their New Year and in India because of the wedding season and things like that. So there is a demand seasonality for things like that. But, because, and I keep harping on this, because precious metal prices are being actively managed, we don't know what the true seasonality demand cycle is for any of these precious metals because they've never been allowed to trade freely. But one of these days we're going to find that out.
How is the gold-silver ratio looking?
Well, right now it's sitting about, I think I computed it yesterday in my column at 66-1. And it probably hasn't changed that much. Matter of fact, it's probably a little worse, say 66.5 or something like that, because silver did poorly compared to gold. But people are talking about 8 to 9 to 1 compared. That's the ratio that silver's mined to gold. And it may not get down that low, but I can tell you it's going to be a very small number before this bull market breathes this last. And I expect, without stretching it too much, that we're going to see a gold-silver ratio well below 20 before this is all over.
Ed, how can people follow you, and can you tell us a little bit about edsteergoldandsilver.com?
Yeah, well, I've been writing, I wrote for Casey Research for 7 or 8 years, and then I went on my own about, it's be 6 years in June. That's amazing. And if they want to check out my website, they can go to Ed Steer, just Google Ed Steer gold and silver, and my website will pop up. I have a tab on there that gives them a sample column. They can see what the product looks like. And if what I write about is of interest to them, they're more than welcome to sign up. And the freight is US $100 per year, and in Canadian dollars, it's about $124, $125 right now.
Ed, thank you so much for being on This Week in Money.
Entirely my pleasure, Jim. Thank you.
My guest has been Ed Steer, founder of EdSteerGoldandSilver.com. He's also director of GATA, the Gold Antitrust Action Committee. He was speaking to us from beautiful Merritt, British Columbia. Our conversation took place on Friday, March 12th. And that wraps up our show for this week. We'd like to thank our guests like Ed Steer, Ross Clark, and John Rubino. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. Now stand by for our company showcase update from American Manganese CEO Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Thanks, Jim.
Larry, it seems to me, as usual, American Manganese has something new to tell us.
Yeah, we had a great press release out first thing this morning, and it's to do with the next stage on our working towards commercializing our process for recycling lithium-ion batteries, and we've earmarked $2.7 million to Kemetco to do research in a demonstration plant, and we're also looking at the design will increase the commercial plant capacity from 3 to 5 tons. Now that's pretty powerful news. I mean, the fact that the company is well financed to do the $2.7 million. That's much less than half of the money we have in the bank, and so we're in really good shape, and we can move this thing forward. Now, I know a lot of people, are impatient about the steps that we take, but we want to make sure we're doing the right thing. And there's no shortcuts in R&D. There's no shortcuts in building the plant. There's no shortcuts anywhere. You have to go with the design, with the results, and the results will tell us where we're going. And we've got enough results now that we're pretty comfortable moving ahead on this program. And what does that mean to the investors? Well, it means that, we are getting there. We're starting to get bigger interest and more NDAs out there than before, and it's coming from different areas, and so we're quite happy with the response we're getting, and I'm hopeful that something will happen in the near future, and because the reality is we do have a solid process, and that solid process will bear up well. I know a lot of investors are concerned about the competition out there. Well, I read somewhere that 3 or 4 years from now, it'll be a $4 billion business, recycling, and so there's room for lots of people. And, they're always going to have other people in there. They may not have as great a process, but they will be moving ahead too. And remember, I've been saying this before, that the more involvement you have in recycling, the better off you are. And why is that? Well, you're not the only one talking about recycling anymore. There's another 100 companies or so that are out there talking about recycling, from the point that they're going to look into recycling, that they can get 80 to 90% of the battery back on the recycling program, et cetera, et cetera, et cetera. I know, and certainly astute investors know, that it's not something that you just churn out like baking a cake and everybody copies it and has the same cake up there. Ours is a patented process. We have 2 patents on it. We feel very solid about that. And whether we develop new patents or not, we will take a look at it. We had one that we wanted to develop, but it seems to be in the mainstream, but it's not a crucial patent, and we can proceed with that in our process design. So it's exciting times, Jim. The market's been in fluctuation. We seem to move with the Nasdaq, and the Nasdaq has been up and down, mostly down. And that's where all the tech stocks are in the U.S. So, we all get the same brand, and but we're not hurting that bad. The price of the stock is holding in there, and I can't say enough for Kemetco and their astuteness. We were lucky to discover them back about 12, 13 years ago when they worked on the patent for manganese, and they basically, after going through about 4 or 5 different R&D labs, we met with Kemetco, told them what we wanted. I had a plan, and told them the plan. And so at the time, the president of Kemetco was looking at it, and he says, "I think we can do this." And I said, "Well, let's get started. What do you need?" "Well, naturally, you need money." And we moved on from there, and then we took that patent and we morphed it into a recycling patents. And so, it wasn't something that happened overnight. It takes time, and I can tell you, if you were sitting where I would, you'd be excited almost every day. But you can't count on anything. It happens when it happens, and you can lead a horse to water, but you can't make him drink. But that is starting to look more and more plausible as I speak. So I think we're in great shape, Jim. We're in great shape to move ahead. We're in great shape to finance the company. We don't have to do any financing for some time. But if somebody comes along and offers us a big chunk of money, whether it's through a convertible debenture or through a private placement, we, in all probability, would not turn it down. And, I like the idea of a joint venture, partner with deep pockets, and allow us to do what we do best, and for them to finance for a fair-sized interest in the process. So that's kind of where my thoughts are today, and I wish everybody a great weekend, and it's going to be hopefully a restful weekend. I have to tell you that I spend about 8 to 10 hours every weekend going through releases and emails. I get over the weekend I'll probably get 1,200, and and it keeps you busy. You're just trying to keep on top of everything. So just because there's competition out there doesn't mean that you're kicked out of the race. This is a race that there will be probably 30 or 40 recyclers 5 years from now, and we hope to have a big percentage of that anywhere in the world.
Larry, for people new to American Manganese, what's the company all about?
American Manganese is a critical metals company that had its start in low-grade manganese in the U.S., which is a critical metal, and I always like to say this: you can't make steel without manganese, and if you can't make steel, the world stops. So that gives you the picture there, and it's also catching fire in the battery industry, and which, by the way, I didn't mention. I think we're in the best position out there being involved in the EV car revolution that's happening. There's hundreds of billions of dollars being spent every year by battery manufacturers and EV car manufacturers, and so it's the area you want to be in. And recycling is now becoming up. One thing about recycling, governments are getting involved. They're seeing that there is potential to make sure that the people that are recycling have I won't say closed loop, but I will say that they have a environmentally friendly process. If they want to get permitted, they have to have that. And so there's all kinds of reasons why we do the things we do, and certainly the patented process we have speaks loudly for a closed-loop solution that protects the environment. And that's a major interest to us since 2010, when we've made our first lithium manganese batteries, and I should say they were prototypes, and because we were interested in that field since then, and we were interested in that field when we started our manganese project, which meant no wastage of water and no tailings ponds.
Larry, how can people get more information about American Manganese, and where are you traded?
We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded on the QB Exchange, under U.S. QB Exchange, under the symbol AMYZF. We're traded in Frankfurt under the symbol 2AM. And you can get all the information you want at AmericanManganeseInc.com.
Larry, how can people contact the company?
They can contact the company by phoning 778-574-4444. They can email me at LREAUGH@AMYMN.com.
Larry, thank you so much for the update.
You're welcome.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on March 12th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.